Futures and forex trading contains substantial risk and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please take a moment to review the full disclaimer. Hello traders, this is Kevin from chartspots.com. Looking at the DAX, the title for the video is a change in tone for DAX. If you've been following the market closely, you will probably have noticed. So on the screen now we're looking at the weekly. So I'm going to point out the first major change since we bottomed out somewhere in March here. We have been time framing up on the weekly, with one exception is the week where we had the ECB meeting. We tested just below the prior week's range, but ended higher than we closed the week before, and then we started time framing up again. And this week was quite different. Already on this chart, we have been time framing up for such a long time, several months, and now this seems to be broken. So that's where you can already see it on the weekly chart. Another thing I wanted to point out on the weekly, so where did we stop? Exactly on this high volume node, which was formed in this distribution. So we first tested this point of control of this area here, this whole area, got through it, and then started failing at this high volume node up above. So not yet reaching the all-time high. So that's something important to note. Another thing, if you look at patterns, I'm sure this would look familiar to you. Head and shoulders seems to be forming here. Now I don't really trade these patterns, but it's definitely something I keep an eye on. Okay, so I mentioned change in tone. Here we're looking at the daily chart. Let's make this a bit more visible. So if you look here, these arrows or triangles, they are ECB days. So this was an ECB day, and we started a rally from there. And now the past few days we've seen quite a big range compared to what we typically saw on most sessions. We had a few big ones here as well, but most of it was like complacency type of trade, grinding up all the way, never really retraced anything. So that's a bit worrying. And we basically stopped at an important level. You can also see that on the weekly. So you have a bit of a division. Here is a high volume distribution, and here is another one. And where we tested this area during the past week, and we did close in the accepted price up there, so that's quite okay still. However, it is important to take note of this area. As you can see here, we flew through it. On the way down, same thing, and now on the way up again, we just went through in 1 week. So which might mean if we come down again, it might go fast. This area was mostly auctions in here, so the early summer of last year. Another thing I wanted to mention is we're now approaching June. Typically the summer months aren't the best for the European equities. Typically you see more of a bid for the safer assets like the Bund, for example. So keep that in mind. So on one hand we had this big rally. We're now entering the summer. We know, historically speaking, that typically we tend to channel down a bit during the summer. So taking all those things into account, I'm starting to turn a little bit bearish, of course, to really have that bearish sentiment. I really want to see this area taken out. If we next week start dribbling around here, that negates my bias. Okay, so one more thing on these drops. This is a 30-minute chart. You see here this big drop. We never tested this area again. We failed to come up there. Of course, having these highs so close to each other looks to me like we might want to test it. But keep an eye on this area. If we fail to re-auction up till here, it's also not a very bullish sign, to the contrary. What I also wanted to point out, if you look at this level, so we broke down here. If you go all the way back, this is 1st of February, probably a known date for you. This is basically when the sell-off started, leading to a 10% correction. We basically came back to this part that wasn't properly auctioned, and just below it we stopped and turned around again. So that's also something that I found interesting when I noticed this. Another kind of canary in the coal mine. If you're not doing so, I recommend looking at the VSTOXX. The ticker here is FVS, so it's basically kind of a European VIX. As you can see, in February and March we were trading quite a bit higher, basically in a range of 17 to 20 something. We started breaking down this range when we started moving up in price. We had quite a bit of a consolidation in this area over here, and then we had another one a bit lower when we reached the top, but now we are channeling up. We left this distribution and went up. So what does this mean? It means that insurance for downside moves, for example, options pricing is getting more expensive, which is kind of confirming the downside risk that the market participants are currently seeing. So take note of that. Also see how we react on this 1650 level. If the VSTOXX starts to go higher, then that confirms any downside move you see in products like the DAX or the Euro Stoxx 50. If you want to know more about potential reasons for this, I suggest you look at the Italy news and other fun stuff like that. I'm not going to dig into that one. So with that, I wanted to have just one brief look at the Euro stocks, which is the broader index. And there as well, it's very visible how the trading changed. Just 1 week ago, we had tiny ranges in the first hour. You see these yellow lines is the initial balance. So it was only a couple of points most of the time, and we kept grinding higher. And now we have this similar drop and retracement and drop again. Here the high seems a bit more secure on this product, so let's see how that turns out next week. Keep in mind that on Monday both the UK market and the US markets are closed or trading very lightly due to holidays. So I'm expecting DAX to be relatively quiet. Of course, if this is not the case, that is important information as well. So with that said, good luck and trade well, manage your risk. Goodbye.